Support and resistance are common terms that traders use to describe levels where price is more likely to stop moving in one direction or change direction. Support refers to levels where price might reverse and move higher, or it can be a level that slows the momentum of price moving down. Resistance refers to levels where price might reverse and move lower, or it can be a level that slows the momentum of price moving up. Support or resistance are determined by the trader. Moving averages, previous highs and lows, key price levels, and trend lines are the main indicators that traders use to find levels of support and resistance. Let's look at how traders could use moving averages of various lengths to indicate levels of support and resistance. Moving averages below price may form levels of support, while moving averages above price may create levels of resistance. Traders can add more than one length of moving average to visualize initial and deeper levels of support and resistance. For example, a trader might add the 21, 100, and 200 period exponential moving averages to their charts. Typically, the shorter the length of the moving average, the weaker the support or resistance it creates. This means that, for example, price will move through a 9-period moving average on a 5-minute chart more often than a 100-period moving average. The 100-period moving average is considered to provide stronger support for price when compared to the 9-period moving average. As price moves to areas that a trader believes are support or resistance, moving averages will be used to pinpoint areas that price could move through or bounce off. For example, if price is moving up, then retraces to the 55-period moving average, then starts to move back up, there is a good chance that the level will hold as support, and price will start to move in the direction of the original trend again. If price moves to the moving average and does not bounce, there is a chance that it will move to lower levels of support. In this example, price crossed below the 200-period exponential moving average and has not been able to move back up through this range. The 200-period moving average now indicates a level of resistance. Other ways technical analysts look for support and resistance are at points where market price made previous highs and lows. If a market is moving up, it will tend to encounter resistance at a previous high. If a market is moving down, it will generally find support at previous lows. If price breaks through price support, then it will generally continue in that direction. When price breaks through support or resistance, these levels will reverse. Support will become resistance, and resistance will become support. For example, in this chart it shows the level of price resistance that held for over a year, where price was not able to move higher. Once this level was finally broken, price trended higher. The first retracement of the move up could only make it back to approximately the same level that the price was not able to break previously. Support and resistance can also be observed at certain price levels. For example, specific prices will create levels where price will find support or resistance because this is where there is potentially increased interest in trading that particular market. For example, the daily chart of crude oil shows how over a few years the $100 level in crude could not be successfully broken by more than a few dollars, and each time it attempted to break out, price retracted. Another way to look at support and resistance is through trend lines. Trend lines can also act like moving averages, except they are based on the highs and lows that price makes. In this chart, we see how a trend line can act as support. In a market that is moving up, a trend line would be drawn through a series of lows in price. This creates an upward sloping line. The theory is that this line can be extended past current price and will support price as it moves back down towards the trend line. A trader can also draw a line through a series of highs that the same market has made, creating a channel where price will, in theory, stay contained. The same lines can be drawn for markets that are in a downtrend. Levels of support and resistance offer traders insights into areas where price might stop trending and retrace, or where retracements might stop and price will begin to move in the direction of the original trend. Traders should be aware that support and resistance will not always hold to the penny. Rather, they are zones that can be identified in a market which might be favorable for traders to enter or exit a trade. Support and resistance levels offer traders another piece of information they can use to assess the markets.